What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Friday, May 17th. Alright guys, Palantir stock here today down 2 cents a share. That's minus 0.09% in regular trading hours. Bigger move in the after hours here than the regular hours, at least as of right now. Currently up about 10 cents a share. It's likely to be a little bit different by the time you get to this video. Either way, take it with a grain of salt. Volume is very low. Stocks are easy to move in the after hours. Now listen, we're going to take a look at everything that this stock was willing to give us here today in terms of bias and information that can help us get the best understanding possible heading into tomorrow. So let's do that. Let's start with a volume profile analysis here on the 5-minute chart. And what we're doing here, guys, is we're just looking under the hood, pulling out whatever bias we can get, meaning bullish or bearish, based on the underlying moves. And listen, if you have not done so already, or maybe you're new here, if you are, welcome. Please subscribe to the channel. My goal is 10,000. I think within the next, I'm going to say 2 weeks. I think that makes sense. And I appreciate you guys subscribing to the channel, and I will keep the Palantir videos coming. Now, let's do what we can to get some directional bias here as far as the volume profile is concerned. It's not every day that we'll get some, but let's take a look. So we get a very high volume bar off the open. If we compare that to yesterday, it's very contextual to yesterday. Very similar in terms of size off the open, right? And then we get that very normal quick fade. Big pop and green bar. Unfortunately, we didn't get any consecutive bars, guys. If we had like 3 or 4 bars at that volume, that would be tremendous bullish bias, but unfortunately just the one, too much of a risk there to assign anything. As we head through the day, you know, okay, so we start looking at something like this. It's just not enough, guys. I'm very uncomfortable assigning anything to that, because if we did that, then we'd have to assign there, we'd have to assign here. It's a slippery slope. So we move through the day, there's really not a lot, okay? And then this close here, this bar is going to be maybe the start of some rebalancing. However, you do have a pretty clear red bar with very small wicks. Okay, so likely just some selling pressure heading into the close. But this bar here, the doji, which is why it's white, right? No movement from open to close on that bar. That's a rebalancing bar. Okay, so oftentimes, usually that'll be red or green. I tend to ignore that bar, and sometimes even the bar heading into the close, unless we see like 8 consecutive red bars on higher than normal volume into the close. We're not seeing that today. There's almost nothing here on the 5-minute. And, you know, that's actually really interesting because it's essentially a flat day. So we need to move on and stop spending time here because we need to try to pull something out, right? So let's take a look at the psychological self-fulfilling prophecy levels. And you can see, and the reason I call them that is because these are going to have a lot of eyeballs. I designed these charts. It didn't take much, right? They're very simple. The 3 charts that we look at here in like the middle portion of the video, these are the charts, the top charts that are going to have the most eyeballs. Therefore, there's likely to be the most decision making around what we look at on these charts. Now, you remember yesterday, guys, here on Palantir, we were talking about how we were in a pretty good scenario because we were above both the 50 period and the 200 period here on the 30-minute chart, but we were kind of close, and I figured we were likely to see a retest, and I want to hold. Now today, we're even closer. Okay, we retested it here off the open. It was sloppy, but we held. We then kind of tried to accelerate for the remainder of the day, not really getting a lot done, and then faded hard, pretty close to against it within a couple of pennies, into the close, into the bell. So listen, we're basically right on top of that 50 period here on the 30-minute as of today's close. So tomorrow, bulls, I want to see a retest of the 50 period and a high volume rip away to the upside. Okay, even if we don't make a perfect test, fine. I just want to see a rip upside and high off of high volume. But I would be happier with a test and then a rip. And the reason I say that is because we really haven't had a very decisive move away from the 50 period yet. We've just kind of been making little bounces along it, respecting it, but not really doing a whole hell of a lot else after respecting it, right? So listen, tomorrow, bulls, I want to see a high volume bounce away from the 50 period. Bears, best case scenario here tomorrow, rip down through the 50 period, rip through on high volume, and then if we need to, make a slow, low volume retest of the 50 period, and then boom, reject on big, high volume, pouring back in, agreeing with that rejection. That could set you bears up for a downside test in the near term of that 200 period here on the 30 minute. Now let's move on here to the 4-hour chart, and the culprit becomes clear. For the last 3 days, Palantir has been struggling with the 50 period here on the 4-hour chart. So this is really, really obvious. You know, bears, this looks like a tremendous win, but if you're a bear, this is kind of like the bare minimum. Ideally, bears, you want to see this thing reject, because if you just continue to ride this, eventually it's going to break. So bears, it's time to get a high volume rejection off the 50 period and actually sustain that through the close. Whereas bulls, it's time to rip up through, no questions asked, retest it on lower volume, and then bounce on high volume. That will likely need to be watched on a different time frame than the 4 hour, since of course we're only dealing with 2 candles on the 4 hour. It's kind of hard to watch the smaller moves, right? Like a little rip through and then retest and then bounce. But that's why it's helpful to have multiple charts pulled up at once on the same stock when you're looking at it, right? So I tend to have the 1 minute, the 5 minute, the 30, the 4 hour, and the daily, just as like a preset. Whenever I type in a stock, it pulls up all of them. So that's really helpful. But, you know, bulls, it's been 3 days and we haven't been able to rip through on high volume. So it's time to get that done. If we can claim the 50 period on the 4 hour as support, flip this resistance into support, that sets the bulls up for a rip through 22 and a near-term upside test potentially of that 200 period, which is that gray line. But it all starts here with the 50. All right, bears, really easy for you guys. Just reject and retreat back away from that level, actually defining that as a hard resistance point rather than just kind of weak bounces along the level. Now, let's take a look at the daily, guys. This is the most important chart of all, and you can see we're still far from either of these levels, the 50-day and the 200-day. So the story on the daily really is the same. I think the story ultimately on Palantir, at least as far as the charts are concerned, is the 4 hour, but the story on the daily, guys, is still that 3 day long channel between 21 and 22, because each whole dollar is a huge psychological level on Palantir, with like each $5 increment being even more important. So bulls, goal tomorrow, aside from what we talked about on the 4 hour, looking to break through and hold 22. Just reclaim another whole dollar, and I'm happy as a bull. Bears, same deal, just to the downside. Reclaim 21 as a resistance level, get down into the 20s, and I'm happy as a bear. It's really simple today on the daily on Palantir. Now, implied volatility, guys, very, very crucial to understand, especially if you're trading options. Extremely low compared to the last 3 months. So the Vega value currently being priced into the contracts is going to be really low. So if you're looking to buy new calls or puts, conditions are a bit more favorable right now. You're not paying quite as much Vega up front. It's very low compared to the last 3 months. Now, expected move, guys. Thursdays are luxurious because we have an expiration. Of course, we just have weekly expirations, but we have one tomorrow. So there's no math, no guesswork involved. The market's volatility expectation by tomorrow's close compared to today's close is plus or minus 49 cents per share. That's the volatility expectation. Okay. Now you might be thinking, well, okay, what about directional bias? Let's look at volume. All right, because the volatility bias is just as important to understand, especially as an options trader, because it's such a huge part of how the options are priced. You can't only have a directional opinion, you also have to have a volatility opinion to go along with that, and that's how you build a really strong options position. But here in volume, we have about 173,000 total contracts traded today. 114,000 of those were calls and 59,000 were puts, so call side bias on the overall ratio. And then if we break that down by the short-term speculators, the 0 to 20 delta range, 35,000 calls, about 27,500 puts. So the ratio gets a little weaker when we go short-term speculators, but it's still to the call side. And of course, that call side bias on the overall as well. Listen, guys, you want to come trade with me every single day? I'm sending out my personal scalp setup alerts, in-play stock alerts, human-verified unusual options activity, all at that link in the pinned comment. I'll see you inside. I appreciate you leaving a like on the video, and I'll see you in the next one.